Money the greatest.
Hey, what's up, B?
How is it going, my friend?
All good, all good.
Good stuff. Good stuff.
How's everything?
Not bad, brother. Just bored out my mind.
You said what?
I said not bad, just bored out my mind.
Oh, you haven't been trading, huh?
I haven't seen nothing that I was particularly interested in getting involved in.
I guess that's what makes you a great trader, because you allow yourself to be bored and not just do crazy stuff.
Some days I wonder if that is the definition of sanity or insanity. But it hasn't been particularly interesting on most days of trading. And when I count the amount of losses I've avoided during this time, it reminds me why I'm doing what I'm doing, essentially. But on a day-to-day basis, it's boring.
Yeah, understood.
Yeah.
Gold was kind of it wasn't, but it was kind of tricky today. It just didn't have no movement. It wasn't tricky. I know the moves now. It just didn't have no movement today.
Yeah. Oh, tell me what you're working with today, bro.
And
I've been looking at gold
today. Let me see. Let me share my screen. Can you see the screen?
Yes, sir.
Okay. I just knew today, obviously I see the trend is a downtrend. The phase is correctional. And I just felt like I just knew it wasn't going to turn the phase today. I just for some reason, because I knew unemployment claims was going to be bad for the economy. So I just didn't believe that
Didn't those come in like on par or something?
No, it was bad for the economy. It went unemployment claims was high.
Yeah.
Bad for USD.
But not higher than what they expected, right?
Yeah, forecast was 240.
Oh no, it did come in higher than expected. Okay. Yeah. That's what I thought would happen.
Mm-hmm. And then existing home sales, that's the one that came in lower.
Oh, man. Wow.
So I went to the 15-minute, and what got me today, I don't know why I was on the 15-second time frame. So I took the L. I don't know why I'm doing that. So I won't do that no more. I'm like, I just got used to the 1 minute. Now I'm on the 15-second. I'm like, yeah, I can't be doing that.
Oh, yeah.
And then I'm trying to catch a reversal and not a trending on a 15-second. I'm like, yeah, I haven't even done that yet. So that was crazy of me. Yeah. Like one little.
Were you buying or selling?
I wanted to buy right here, but I guess I bought too soon. This is demand zone. Mm-hmm. And then I was on the 15-second. I don't want to go back there and check it, but I bought too soon. So on the 15-second, I bought something like, I believe I bought somewhere probably like right here on the 15-second time frame. I don't want to go down there because I'm not going to be on there.
You bought 30 minutes before the news.
Yeah, and I shouldn't have done that. So
the price, brother, you needed to have waited.
Yeah. And then price came down, and that's when the news came. Price was just, I bought somewhere like right here, I believe. I bought twice, one right here and one right here. I lost. And then news came, shot up, went crazy. And then I took a sale right here on a 5-minute inside bar because I knew price had to come down We were like overbought. So I took a sale right here. This is what I do. So I know my inside bars, they work. I'm managing on a 1 minute though. And I just held this thing. And I should have got out right here because news is at like, well, I even stayed in. So price came down again. And I don't know why I gambled. Like I had the money that I lost today, I got it back. Like I was already up 2 bar. I felt like I should have closed. I felt like price was on the 15-minute, price was still bullish. Price was still higher high, higher low, higher high, higher low on the 15-minute. So
I'm never going to recommend that you trade against order flow on a middle time frame. That's just dangerous.
yeah.
But if you're going to do that, you have pretty much between this range and this range. By the time you get somewhere to the halfway point, if you're not out the trade, you should be out the trade.
Exactly. Yeah, that's what I was thinking, but I'm like, I was getting greedy. Yeah, totally. And I'm at the fit, and I'm at golden zone. Yep. So price was all right here, and I should have got out. But I didn't get out. So I ended up leaving with like 0.5%, but I had my 2R, and I would have broke even for the day. Because I thought and then so this is gambling. I thought news was going to push me further. I thought the existing home sales will be higher, but it came in lower. So I thought I was gonna get a push, but I thought wrong. And I should have just took my profit because I already messed up for the day. And then price ended up taking me out. Well, I got $600 like from here, 0.5. So that was my trading day. But thanks for that, because when it hits the middle, I should be getting out if I trade against order flow.
Yeah, it's quite dangerous to do, but if you're going to do it, bro, by the time you get to halfway, you should definitely be out. Because at that point, you're trying to predict that the market's going to reverse, and there's no guarantee on that one. But
yeah, but
you got if you're going to do that, you want to do quick scalps. You don't want to be trying to hold trades through that.
Correct.
I was hoping that home sales would beat. I'm surprised that home sales didn't come in as high.
Yeah. So I'm thinking tomorrow, because all I'll do is focus on gold now. So I'm thinking tomorrow we should be able to get this chalk in here so we can start selling. We're right now we're in a 4-hour supply zone. So I knew he wasn't get the chalk today. I just knew it for some reason. But hopefully tomorrow in London we'll get the chalk and we'll be selling tomorrow on gold. Look like it wants to. We'd have to wait.
I'm hoping so, man. Gold's about the only thing that has some type of momentum. And it's largely because when people are fearful about the dollar, they put their money into other commodities and other assets, and that turns into gold. So
yeah, I guess most of the value was on gold was like Monday, Tuesday, Wednesday. Like London session yesterday, it went like 200 something pips. It went crazy yesterday for London.
Oh.
260 pips for London. But we
I forgot what it was. It was something news-wise. Oh, GBP. It was because GU's inflation came in higher. So people were kind of, I guess, expecting or hoping that the US dollar would have something of the sort similar. It was weird.
Yeah, but pretty much with my trading, I've been it's more of a psychology thing with me. So I'm getting better with my technicals is great. I feel like everything can get better, but obviously I messed up myself doing 15 seconds today, which I don't even practice. I don't know why I did that. It's because I bought that. I upgraded my account, so I just started looking at it. But that was the only thing that I haven't practiced, and I just went on there, which was not smart. But other than that, like my main thing of trading, like it's like I don't live to fight another day because I will be blowing my account. But now I have my risk management in place, so it's like it's only up from here. I feel like.
Yeah, well, I mean, you have the knowledge of what to do. Now it's just making sure you have the discipline to follow it. And
Yeah.
getting the knowledge isn't the hardest part. It's the discipline, because there are a lot of people who are knowledgeable traders, but they'll go against things that they know in the moment. But I always like to say, like, you're just treat trading like being a high performance athlete, right? Like LeBron James, whether he's down, 3-1, or if he's going to be one more game to NBA Finals, he's always trying to play for it's one game at a time. He doesn't worry too much about what's going to happen ahead, doesn't worry about the consequences. He just focuses on what he controls and all that. So like right now, there are a lot of things I can't control the market. When I look at it, it's not really all that exciting because the whole market as a whole is on a risk off type of standpoint, but that's not in my control. So I just focus on what I can do. What I can do in that time is I can identify opportunities, and if my opportunities come and line up, I take them. If not, I know when to stay out. But there should never be a moment where you're feeling like, oh, I have to hop in the market. No, you don't, because like you said, you can know everything in the world about how to go about the market and then blow all your money, not because you don't know how to trade, and not that you're not a good trader, it's just that you're not disciplined. So that is the key. That's the key, my man. You want to stay disciplined. So don't start doing stuff just like, like you mentioned, you upgrade your count, but you get off 15 seconds, but it's not part of your plan right now to currently do 15 seconds, so don't do it. So that should help. Hey, Calvin. I didn't even see you there, brother. How's it going?
Hey guys, how you doing? I'm good.
Good.
Take anything this morning?
No, not with this market.
Yeah, neither did I. My window is compromised.
Yeah, nah, most of my stuff was moving sideways when I saw in the morning.
Yeah.
I've been getting extra sleep the last couple of days.
I have one simple question. Well, I shouldn't say simple. It's simple. It pertains to the 1 minute time frame, structural 1 minute time frame. So when I'm back testing, I just have a question about one of the rules for structure. So a lot of the times I'm noticing that a higher high or lower low, or a data point will be printed to me, but the next, I guess it's two candles. Let's say for example, I'm going to mark a higher high, and it's two candles with a wick at the same exact price. Does that count as a 3 pivot? Like, do you know what I'm saying? If there's one candle that's printed with a wick at 1.94, and then the next one is the next high of the next candle is 1.94, does that still count as a data point? Or do you understand what I'm saying? It's kind of,
yeah, no, it doesn't meet the rules of a 3 candle pivot then.
okay, so 1.94, and then the next candle has to be below 1.94. It can't be 1.94, right? That's not a pivot.
Yeah. Mm-hmm. Yeah, it can't be, because then at that point you wouldn't have 3 candles. You would have 4 candles.
Right. So if you have 2 equal highs, it can't be a higher high.
No, it wouldn't meet a 3 candle pivot or pivot rule. If you're saying you want to do 3 candle pivots, then technically no, because you shouldn't have equal highs, equal lows. So that's a special situation, and you have to decide how you want to handle that special situation. But,
Okay.
but kind of what you're asking, would it meet your rules? No, it wouldn't.
Okay.
So
So you would have to wait till, for example, a 1.97 and a 1.96 printed.
that's one way of approaching it. If you go back to the course and you look at the 5 candle pivot section, I talk about special cases where you don't have 5 candles and you have 6 candles.
Okay.
So you'd have to apply something. You could apply something similar, or you could just decide it doesn't meet your rules and you would avoid those things.
Okay.
But you want to test and see which one do you do.
Okay. Right now I've been marking it as data, as structure. So maybe I need to take a
Hey,
better.
Calvin, don't you have the 3 candle pivot indicator?
No, I have a 5 candle pivot one, but I'm just talking about back testing because I can't use any of those on FX replay, you know.
They offer the 3 candle pivot for the course,
Oh, you do?
Yeah.
No, we just have just a 5 candle pivot.
Oh, just
Yeah.
the 5 candle pivot? Oh.
Yeah.
Okay. I mean, no, that's fine. I have to know how to do it anyway because of the back testing. So I'll look deeper into that and see what I can come up with here for the rule.
What pairs are you looking at?
Are you asking me?
Yeah.
For back testing, I'm back testing EU right now.
Is that the pair you trade?
Yeah, I mean, I trade NOS, US30, EU, and GU, and that's really it. And I've been looking at, well, I guess I should say UJ and CAD JPY ever since Brian started trading it, but it's probably not a great idea until I back test it. So I'm gonna stay away from this from now on.
So how is all those pairs doing for you? Like you named like over 5 pairs. And I know you still have a question about the 3 candle pivot. Are all those pairs, is it good for you?
Yeah, I don't necessarily. I kind of have the mindset like I don't care what pair I'm trading, as long as it just follows my plan. Because
Exactly.
I look at all the pairs like they're this honest. I don't know, like kind of like they're the same, and if they meet my rules, like I kind of just look at it like, okay, if this happens, then I wait for this. If this happens, then I wait for this. If this happens, then I can execute, and if it doesn't, I can't.
But do you know about safe haven currencies?
Are you asking me?
Mm-hmm.
Like Tether?
No. Like, do you know about safe haven currencies?
Mm-mm.
So there's 4 currencies in the world that when things are bad, this is where people put their money into.
Yeah, like gold and silver.
No.
Oh, okay.
I said currencies.
Okay.
USD is number 1. Then number 2 is Japanese yen. Number 2 is euro. Number 3 is Japanese yen. And then number 4 is the Swiss franc. So when you're talking about choosing your currencies, you should also be keeping into account safe haven status, because yes, all your currencies can meet your rules from a technical perspective, but no, all the currencies and pairs are not the same. And there's a reason why you should know which pairs are which and which ones you should use and whatnot, because there's all kinds of other attributes that go into making a solid decision as to what pairs you should trade. There's what's called your average daily range, in which you have a trend trading strategy, but if you pick a pair that has a low average daily range, which what EU has had recently, you're going to have a struggle to be able to find opportunities. USD, JPY, GU are all pairs that almost do double, and they almost do double of the average range in pips on a daily basis than EU. That's why they tend to be better pairs and why you see people trading them. Even P Money trading gold, That's a pair that has one of the highest average daily ranges, and it's the reason why it's great for trading our strategy. But each pair has its own characteristics that you need to also understand too. There some are super sensitive to news, others are not sensitive to news. Some are sensitive to certain types of geopolitical events, some are not. Some of them have high volatility, some don't. So you're back testing, and yes, you're testing the system, but you also have to take into account the characteristics.
Yeah, I'm
And-
learning that.
Yeah.
As a,
So like the dollar's doing bad right now, which means gold's shooting up. More than likely going to keep shooting up until there's, when the dollar ends up going back up. So, but like you should not look at every pair the same because they're not. Like personally, I don't even like GU. GU is my favorite pair between the two. GU will move more in pips in a day than EU, but each pair is affected differently. And you have to know the reason why, like, for instance, you'll see me trading certain pairs is not because, I can just apply my system to anything. I can apply it in stocks, I can play it in the futures market, I can apply it in Forex. But there are certain reasons when I decide to change pairs because of understanding of the events that are surrounding on the fundamentals and why this pair may respond well to what's going on. Like there's the majors, which all include USD. They're the minors, which tend to trend more than the majors, but they're not, they don't have as much volume. So they're really volatile, meaning that it's harder. That's why the spreads are a little bit larger. Then you have the exotics, which the exotics, one of my favorites is USD MXN. It's probably my favorite pair overall. And when it trends for a long time. But the spread is horrible because it's not that liquid. There's not that many people trading USD MXN, so they have to have a high spread.
I noticed last year, maybe like in the middle of the year, when I was looking back on it, NAS was trending, and then all of a sudden, it was just stuck in like terrible consolidation, and like looking at like when it was trending, like it was honestly just like a perfect trending bullish market, and like it was way easier to trade. And then when it got into consolidation, I started taking more losses. Well, at least that's what I noticed in my back testing. So
NASDAQ is a stock index. It's made up over 100 stocks across the United States.
yeah,
It's an index, which means it's only supposed to really go up, meaning that the economy is doing well. When it starts moving sideways, that's when companies are doing layoffs. They're not doing good on revenues. Their earning calls are bad, which was what was happening last year. And when you start seeing NASDAQ going down, it's a sign of an economy that's failing. So NASDAQ is popular. The indices are popular to people because they are much more smoother because they tend to trend up. The long-term view of looking at NASDAQ is going up. Same for US 30, same for German 40, same for SPX 500. That's why it's very popular. Gold is very simple. When you know that the economy is doing bad, people are going to put money in gold. When the dollar is growing, they're going to sell gold. So they're much less complicated than currencies, because currencies have more factors that kind of affect them. But that's another whole nother category. What I'm getting at is all these categories of your pairs are important in understanding the decision-making cycle as to why you choose to trade what you choose. There's always a why. That's what I'm getting at.
yeah, I have a feeling that I'm gonna get some different results. Like I'm gonna notice a lot more losses in, for example, NASDAQ versus GU when I get through all those trades. And I'll probably just have to, I guess I'll just stick to the best one, right? Because mine might be different than yours, right? Like, I don't know. Same thing with buying and the whole buying and selling. Like if you're better at buying or better at selling, that's a weird statistic. I don't even know what that means or if it means anything. But
It does. There's some people
does?
who psychologically aren't good at selling. So I know there's some traders that will invert their charts so that when it's a sell opportunity, it looks like a buy in their head, and they traditionally will do better.
Is that because the word sell has like a negative connotation to it?
It's something in their psyche that has to
Yeah,
be
I think,
unlocked.
yeah. Some people really like this fourth. Everybody mind really works different. Like it really works different. Like we'll all get to the same profit, but we'll get there a different way.
Right.
It's crazy.
It's all about what you like. Trading is hard in execution, but easy in theory. So you have to train, like it's literally like being an athlete. You just have to train yourself to understand how do I perform best. Kyrie Irving walks around a court burning sage as part of his pregame ritual. He'll also score 25 points on you or 30 points in the night and embarrass your guards. James Harden goes to strip clubs every night, but he also could show up doing 30, 40 points on you, or at least that's what he did when he was in Houston. Like
yeah, you right there, huh?
Yeah, I mean, wait, he was in Houston, he'd be straight up the straight club, after strip club. Next game, he almost pulled up a triple double.
Yeah.
it's like that's part of his pregame ritual, bro.
Real.
But I'm joking, but I'm saying all that like every person.
Nah,
does
that
things
shit real,
differently.
bro. I that shit real.
But what I'm saying all this to say is like all it is trading whatever your mind needs to see to follow that process, right? That's all it comes down to. Like there's no magical solution in trading. There really isn't. All this stuff is old information that's been around for over hundreds of years, and different ways of people looking at it, different ways of people classifying it and calling it. But at the end of the day, it all comes down to, can you execute the plan that you have in your head? Or when you get to that moment of, needing to execute something, are you just doing random stuff that makes no sense at all? Because you thought in the moment was a good idea. That's why practice is important. I know some people disagree about back testing. I think it has a purpose. I think you can be overly obsessed with it, but ultimately there's importance of, you need to practice a plan and know how that plan works, so that when you go into like a game, a war, etc., you know exactly what to do, and you can override any emotions that you feel because all you're doing is following your plan.
I guess I shouldn't say is there a, but can you shed any light on a benchmark? Like, for example, if you're trading demo, or when you were trading demo and you were able to, I don't know how much R or you were making or how consistent you were, like when were you ready to be like, okay, now I can move to a cash account? Like over the course of 3 months, over the course of 6 months on demo? Actually, I think you might have put an image out or a paper out there, but you might have had it in there. I just had to question whether or not you think, what is a good benchmark? How much R should you have for 3 months, or is it just consistency over 3 months of winning?
R means nothing.
Okay.
I'm going to say it the same way. I'm going to say this repeatedly. It's all about consistency, bro.
Okay.
Like R can change at any time. But the moment that I knew that I was ready to move, well, I never really had a demo experience, to be honest. So when I first started trading, the person who was guiding me put $500 in an account and made me double it every single day. And I did that for 2 weeks, $500 cash. And I wasn't even thinking about it. I wasn't even thinking about the money. I was just thinking about following my plan. And by the time I'd seen about 2 or 3 weeks of me doing this and I followed my plan, I was ready to go. I mean, one day I turned $500 into 7,000. He ended up changing my password because he didn't want me to get into over trading. But that's all it came down to. It all came down to, how can I consistently follow my plan? That was all I needed.
Were you like risking 5%?
I don't remember what I was risking.
Wow.
I just took trades.
Okay.
None of this stuff matters when you following your system. Risk. There is an importance for risk management. Don't get me wrong, but it's not something to obsess over, right? Like, I know the propensity of my plan and how well it works. So my risk is in proportion to I know what my statistics are. If you don't know what your statistics are, then you need to be risking no more than 1%, period. Because if not, you're just going to burn away at your account a lot.
Yeah.
But
Are you on demo, Calvin?
Huh?
I was on Calvin. Are you on demo right now?
Yeah, I'm on demo right now.
Is it FTMO demo?
No. It's just a regular demo, and for the past 5 or 6 months, I've
never seen a regular demo. Is it like on a broker account?
Yeah. It's a regular broker.
Oh,
Yeah,
okay.
You can go on MT4 app and open up demo accounts with some brokers, not maybe not all of them.
Yeah. So because I failed many challenges when I got into Forex, because I had money coming in. So I thought money was the solution, which is not. It's your skill and what you have going on, like the skill. It's not money, because Forex is $7 trillion a day business or whatever. So what I'm doing right now, what's really got me working for me, and then I believe I was doing challenges, and Brian said, "Why are you doing challenges? You should be on a demo account." Yeah. So I started opening FTMO demos, and then I started really taking it. I took it serious, but obviously I wasn't good enough, because I will pass the demo and then I will fail it. So what I do now, like, I'm on the FTMO demo, and then I said to myself, like Brian said, consistency. If I pass 3 challenges in a row on FTMO demo, and then I believe I'll be ready to take another test again. I mean, a live funded account test. So I don't know, maybe that's just my input, maybe.
Yeah, that sounds like a plan.
And then I thought, I was like, okay, this is easy. And then, I get into the game. Okay, my risk management is off. I have to work on that. Now that's superb. Oh, okay, my entries are off. I have to work on that. I was blowing the demo account, wasn't taking it serious. And it's like, and me, once I say something out loud, I have to go by it. So I haven't took a live funded account test, because I haven't passed them in a row. I'll pass one and then I will lose the second one. So why am I losing? Because, that's not consistency. So I know I'm not ready to take a funded account test. So, and you're not ready, because you're asking that question. So, so once you'll know when you're ready, because, maybe open a FTMO demo account and pass that challenge, maybe a couple times to yourself, and then maybe, you'll be ready, because you'll find out a lot about yourself when you think you're so good. And like, wow, I'm not passing this challenge. And that's what I did. So I'm still haven't passed, but I've learned so much during this time. It's like my risk management is on point. It's like I learned so much, and I'm happy I stopped paying for challenges and just burning my money through the fire. So I'm almost there, because I'm almost about to pass another one in a row. So I'll be taking it soon by God's grace. But it's all about, staying on my plan. So that's
what
it.
I like about what P Money said is he has a criteria, Calvin. It's not about your criteria may be a certain amount of R. Your criteria may be, certain number of trades. But to keep it very simple, he and I both said the same thing about the criteria. It's just consistency. Because it doesn't matter if you could hit 100 R in some trades and then go through a period where you do nothing but lose.
Yeah.
Like, you can't make the result be, it's weird, right? You can't make the result be the benchmark to tell if you're good or bad, because you can go through a period where, like, I'm going through periods now where in a week, I'm lucky if I can get 10 R.
Yeah.
Whereas last quarter, I was averaging 15 R a day. So I don't look at it. The only thing I look at is, did I follow my plan? If I know I can consistently follow my plan, then the results will work out themselves. I don't obsess about the results. Like, my win-loss is really good, because I'm just disciplined about doing what I know to do. Not because I got some magic formula. I mean, my formula is magic, I guess you can consider in a way. But to me, because it gets results, but for me, it's just simple discipline, right? I've made rules based upon practicing and 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 practicing to the point where I know the validity of those rules. I know what happens when I break them too. And that's enough for me to know not to break them. Because literally, anytime I take a loss, I can look at my rules and say, oh, I didn't follow this. It's like that simple. I don't have to guess what. I don't even have to guess anymore. It's like, damn, I didn't follow this part of my rule. I took a loss. Makes sense. Move on to the next one. But at the end of the day, we do need results to make money in this industry. Don't get me wrong. But you're not in control of those results. The only thing you're in control of is knowing when to pull the trigger and knowing when to close a trade. That's it. So you better be damn good about being able to evaluate the market, being disciplined to enter the market, and being disciplined to exit when it's not in your favor or you've hit take profit. That's it. So like I like how P Money, his benchmark was 3 successfully passed challenges. Cool. That's consistency. For me, it was just knowing that I followed my plan. Like I literally journaled my trades. And when I saw that for, a month, I had no problem following my trades and following my plan. Like I didn't forget any step. I was ready to trade in the live market, win, lose, or draw. So for you, you need to make some type of benchmark because like I said, back testing, and that applied to demo too. People disagree about testing, people disagree about demo, but it serves a purpose. And the purpose is to give you some type of discipline so that you can be able to replicate the same discipline that you operate in these environments in the live market. Now, whether it takes you 5 or 6 months, whether it takes you a year, whether it takes you 3 months, whether it takes you a month, is up to your level of discipline. Nobody can answer that question for you. People can give guidelines, people can give you steps of what to do that can help, but the reality is, on a daily basis, most people aren't disciplined traders. That's why people lose money. How many times can y'all think back to, oh, you take a loss and you're like, oh, I know I shouldn't have done this.
In fact, I mean, that was me all the time since I first started. And that's why I made that threshold for myself. Like the main thing, because like you said, we have the strategy, but it's discipline. Like all that was discipline. And when you lose, are you going back in the trade, pressing click, and it's all that discipline. We have the rules. We have going to a chalk. You know what to do already, but it's in the markets. And when you in there, it's like, it's a whole different story. So, because, I'm glad I wasn't a one-hit wonder where I'll pass a challenge and then fail it. And then because with this, like, there's no reason that if I get funded, I should blow my account. Well, with my risk management I have set up where I have a EA where I can't go past a certain amount. And then if I follow my plan, there is no way I could blow a challenge. There is no way. It's only losing some and then gaining it back, but there's no way I feel like I can blow a challenge. And with my discipline and my threshold rule, there's no way. So I'm glad.
You really shouldn't. Unless you get into an unlucky streak of trades coming in, like through the market, like, let's say, for instance, market's going through a slow time. Understandable, right? Because like I said, you can't control the results, but you shouldn't be able to get a challenge in the first week and blow it. Not with your rules.
Not with my rules and not with my risk management. I just don't see me blowing out. I only can take a certain amount of trades a day. The market ain't that crazy where it just takes I don't see me blowing the challenge. Like now, I just don't see it. If I, do what I have to do, discipline, my risk management is on point. I have that on point. Following the rules, I don't see me blowing the challenge. I see me losing trades. There's nothing wrong with losing, exactly. But winning, there's nothing wrong with losing battles, but winning the war, I believe I will win the war.
Exactly. That's all it comes down to. You gotta live to fight another day. I thought somebody said that in trading. So don't, like, if the market's just not there today, come back the next day it is. Because you can take a bunch of losses or take a handful of losses and be made up all in one trade. Like, you really don't have to go out. You don't ever have to go back and go get what you've lost. Never. You just wait until the next setup is in your probability. Take it, boom, you're right back. So it's Not that hard. You just gotta keep. You gotta have confidence in your plan. If you don't believe in your plan and what you're doing, you'll forever stay stuck. Stuck on demo, stuck on back testing, stuck on not trading, stuck on trying to figure out how people actually turn this into a living. Like, it's not really that hard in concept. You have a plan, you're confident about the plan, you understand how to execute the plan, and you can execute the plan successfully. That's it. So that's why I always ask people, Calvin, do you have a plan? That's always my first question when I see people take trades, because I can tell people who have a plan or people who don't have a plan based upon the way they talk. And the ones that usually generally have a plan, they sound a lot more confident. Just like P Money does. P Money knows exactly what to do. Like, you can hear it in his voice. But
Yeah,
when
a lot of L's.
but he's got, like, that's the part of experience, right? Once you've had experience, you just know how to approach things. That's why you do things like back tests. Why you do things like demo trades. Why you do small live accounts and trading. Like, you gotta get experience to know how your plan operates in different situations and different things. And you have to just understand. You have to have a general understanding of what you're doing overall too. So, that's why I understand the differences in these pairs, because I've not only back tested them, but I took time to research them so I can understand like how they operate different, what are things that they're more sensitive to, etc. And because I know these things, like, nobody can really tell me any different. I can learn new stuff, definitely, but there's nothing that somebody could come in and say, "Oh, this can't possibly work." I'm like, no, I've seen it. It can, and I know there's reasons, and I'm confident in that. So, does that make sense?
Yeah, it makes total sense.
Cool. All right, guys. I am about to let y'all roll. Tomorrow we have a whole bunch of PMI and flash services and manufacturing services information. So please let the market move even a little bit. So
I have a feeling we'll be sitting on my hands again.
be careful on the market if you decide to trade. Wishing you all the best luck. If I didn't get a chance to answer a question, sorry, my computer's super loud. If I didn't get a chance to answer a question, feel free to ask it in the Discord group. If not, hold it until next week in our next Tuesday call, and I will catch up with y'all later.
See you, man. Have a good one.
You too, brother.